Hey everybody, hey traders. Happy Friday. How are we doing today? It's 9 o'clock, August 9th. Let's pop in here for the poll report, check out everything. Um, the week that was, it was pretty wild. It was certainly memorable. Some interesting all-time outliers. Um, 1, 2 percentile moves. A Monday to be remembered. Black Monday 2.0 or 2024. Volmageddon 2024. The tipping point. The Fed pivot. All right. Whatever you want to call it. A lot of stuff happened this week. So we figured it out. We're navigating. We're still navigating. I'm assessing, position wise, things are looking pretty decent. Let me bring up my charts this morning. So let's go here and let's take a look. All right, Chris, good morning. Rev, good morning. Jacob, good morning. David, good morning. Let me go into this workspace here, as well as my little daily guy, day to day. There we go. Okay, so simple outlook. So pre-market, we're down about $1.50 in the SPY. Let me have a look at the futures market for a moment. Let's check currency strength. Aha, the opposite of what I think the markets have been wanting to see all week. Um, Japanese yen stronger. Not, I mean, vertical axis wise, not ridiculous. So it's not like this is just jumping out with strength, but Swiss and Japanese yen and the Aussie being weaker. So we're getting some risk off tone this morning. 529.10. I'll be watching the ES feed this morning. I did post a chart yesterday in my Discord channel, 3 charts actually, but let me see if I can zoom in on each one of these. I apologize for the quality being not great, but I got the real thing. Whoa, extreme close up. So I posted this chart here. Should be able to zoom in. Chart 1. Okay, here's the SPX. So just some really simple, clean technical analysis. We broke the trend line, right? So we break, retest, dump. There's our ABC correction. We pull back right into this area here. This is what I had said. This is a 2-week, 3-week prior analysis before this thing topped over. I was looking for some type of 1, 2, 3 correction, and we got it. So there's our 1, 2, and 3. All right, now we are going to see if this is going to be resuming the uptrend or if this was enough to kind of scare the market a little bit to settle in. Now, I do think that this 5,000 handle is very close to the 200 exponential moving average. As far as pulling back and finding some efficiencies in this area, you have this huge gap that's really noticeable based on the close of Friday last week. Okay, that's what this candle is here. The close Friday and the previous support to become resistance around 54. So if we pull back into this area, if we still pull back a little bit, I could see the bears fading that move or trying to fade that move to retest the lows or find that 200 exponential moving average that is sitting just below that. Okay. Hey, Daniel, how are you? So this is the SPX chart. There's the SPY. You can see the similarities, same type of thing. 1, 2, 3. Friday's candle last week. There's a big gap right there to go find. And here's the E-mini futures, which one thing this proves is if you want to trade with some full-time liquidity, and that's not guaranteed. Like the prices were very wide this week, certainly on Monday. But if you wanted to trade this, you had opportunities to trade this through Thursday to Friday, and Friday starting Sunday night into Monday's open. So and it was just weird. It was a weird situation, right? Second all-time biggest move in the volatility index, largest 2-day sell-off in the Nikkei ever. Unraveling of the Japanese yen concerns. I mean, you talk about the flip-flop in sentiment this week. I mean, the U.S. was begging for an emergency rate cut by the Fed on Monday, and all of a sudden it's like, oh, we've got better than expected unemployment claims. They went down a little bit. Oh, this is fine, and the market was stable for 3 4 days, right? Like Monday, Tuesday, Wednesday, Thursday, the market just kind of figured it out. It didn't panic. Where now the rate decision for the Fed, I still think the higher probability is sitting around 50 basis points. Let's double check that. Nope. Look at this. It's back to 50-50. Isn't this crazy? Stupid Fed. So now it's 55% to 45%. Something tells me it's going to be leaning more towards this. We have data next coming out, CPI, PPI next week, Tuesday, Wednesday. It's actually PPI Tuesday, Wednesday is CPI. Um, but if it falls in line with the Fed making the cut, they can still maybe thread the needle on the soft landing scenario. But I do think the data is going to have to support that. Um, Earnings are okay. Earnings have been, some good, some bad. Some that have been good have been solid, and guidance has been okay. But interesting how this is hopping back around. Where I don't remember if I took a screenshot of this Monday. I think there were other things to focus on Monday. um, but anyway, I don't know. I mean, the Fed will likely, if they have it their way, they'll probably just cut rates by 25 basis points. Um, maybe. Maybe. If they do 25 basis points, I will say, tip of the cap to the Fed for sticking to the plan, because a 25 and a 25 and a 25 by the end of the year. So let's say it's September and then November and then December. They do 25 basis points each, and then they cut by another 25 basis points per quarter next year. You're looking at roughly 1.5 to 1.75 off of current rates. And let's see where they're projecting this out to September 2025. Markets forecasting around a full 2% cut going into, so between 2 and 2.25 by the end of next year. So that's pretty decent. I mean, if we're seeing the Fed rate around 3 to 3.25, okay, hopefully we see inflation at 2 or sub 2. Um, yeah, I mean, for the financing assistance that consumers would be looking for, having a 2% haircut from the Fed would be pretty nice. You know, if rates, of course, followed. If all of a sudden mortgages are down, I've got 30-year mortgages here on my Pulver report. So 30-year mortgages are down. It's at 6.47. It's not too bad though. 6.7 most of this week. So coming down 6.47. Okay, that's notable. That comes down another 2% perhaps. All of a sudden we're talking sub 5. Not bad. Not bad. So if that's the case, 12 months out. I mean, I guess maybe about 16 months out, but makes it a little bit more encouraging to see if supply is catching up, and hopefully you don't botch that situation where now there's an oversupply. You never know. There's always going to be a trade-off. That is for sure. Okay, let's get to the charts. So SPX opening bell is about 20 minutes. SPY pre-market is hanging out just a little bit lower, about $1 lower. The level that I'm watching, here's the E-mini futures. We faded a little bit off this level. This to me is good because I should be seeing a little bit more profit roll in here. So let me check an account. This one. So I've got the 55 and 54, and right now that is trading for around 72.50. Now, my thoughts on this: if we fade a little bit today, go over the weekend. This is a Friday expiration for next week. This is a full bear put spread that would be 100 points wide, with just one contract that'd be worth about $5,000 profit. So I'm going to just hang on this for a little bit and see if over the weekend that there's a little bit more time decay, keep that value preserved around 72 to 75. I'd like to see if we can. I'd like to close this at full profit, obviously, but there's a potential. If I look at this ES resistance, there's a potential. Climb back into that 5400 zone. Although that's where I would be looking to fade this move. So if we have a high to low, we pull back into this low right here. That's right around 5400 to 5430. And I'm looking to see if that level is okay. Nice going bulls. It was fun while it lasted, and then we see if they come in and fade that. So perhaps it's A little indecisive today. If that's the case, that might help my cause over the weekend. With news next week that the market will be paying attention to. I'm not sure what we have in earnings next week. Let's check something. Let's go stocktwits.com and let's go to the earnings calendar. Here we go. So this is today. We have 37 reporting. We had the bulk of the week, Tuesday, Wednesday, Thursday. So notables. Let's go into next week and see what we have. If I can find out. There we go. So next week, the 12th through the 16th. Not nearly as many companies. Well, so this was like the big week, but it was Sans Mag 7. So I mean, I didn't take a single earnings trade this week. There are a couple that I was watching, but I think there were other pressing matters like making sure that Volmageddon wasn't going to bust my account up. And 6. So next week I'm showing 338 companies. We're kind of winding down for earnings season. I do know at the end. Well, that's not true. At the end of the month, let's go out here. So is that right? So 70, 113. I don't know if this is going to change at all. So 70, 113, 114, 35, and 6. 338 next week. And oh my gosh, that's ridiculous. We have over 1,200 reporting on Tuesday the 20th. And somewhere in here, we have some NVIDIA. There's Palo Alto. I'm looking at some notables. Zoom, Workday, Burlington, and then end of the month. NVIDIA is going to be the 28th. Yeah, so strange. Well, we're kind of winding down, but there's obviously earnings going into the final piece of Friday the 30th. So more to watch, that's for sure. All right. So futures wise, let me go to this chart here. I will be watching for this level. Let's go horizontal ray, SPX. So that area right here. So right in here. It's a nice little resistance area. Plus, we could have a full gap fill around 5442. But I think this is the spot. If you're at 5,400 or so, that'd be the market. If you're long, that's a pretty good spot to be protecting and trapping and getting out just in case this thing makes a turn, right? If we get up here and we just work our way up into this gap, and then all of a sudden this is like, okay, hello bulls, thank you for bringing us the price, and then the bears are like, bye bye, and we see another push lower, right? So technically, this is what I'm talking about. We had a bit of a vol event. I spent some time this week going back to figure out, how do you grab Monday's price and correlate it with something that's happened in the past. This isn't like, oh my gosh, this has never happened. It has happened. It was a very similar move that we saw back in 2017 with super low volatility, and then in the early stages of 2018, it was January 2018, big vol event, spikes up to 50, and vol went up, came down, and then spiked up again, came down, and that did allow price to come in and retest the previous lows. In this case, these lows get retested. We're going to be very close to poking that 200 EMA. Now, is that a good buy opportunity? I mean, longer term, sure. Anytime you're buying the S&P at a 10% discount, I think it's a great opportunity. I would be more concerned if we take out this low, right? If somehow we have a retest of levels and this goes slightly lower, but it comes all the way back down to below 500, to me, that would be what looks to be just a head and shoulders pattern in a market that could top out and have one bigger corrective pattern. Now you put that against the backdrop of this run we've seen since COVID and since the bottom of 2022, a correction up here. I mean, if you're a Forex trader, corrections happen all the time and we see all sorts of efficiency, right? So there's an outer trend line. Could we have a high, low, lower, high, lower, low? Come back and retest this level right here, come back and retest this level right here. Sure, we could have that, but it's not going to be fun because of all of a sudden we're talking about 15, 20+% corrections. That's as bad as 2022. Um, 25 to 35% was as bad as COVID, and of course, Great Financial Crisis is 50+% in an index. That's awful. While the Nikkei, or not the Nikkei, the SPY was down over 50% 2008. The Nasdaq was down over 50% 2008. The Nasdaq during 2001's dot-com burst, that was down 80+%. So you never know. But as they say, plan for the best, prepare for the worst. And we had some blindside stuff happen, even though it wasn't really. It was like flagging, and there were signs all over the place. It was just, I think the challenge this week was how it happened over the weekend. I think that made it the toughest. Is there was very little to do from Friday's close to Sunday night futures open into Monday's open. I think that's what made it so challenging. All right. Anyway, that's that. Okay, so we'll see what happens here in about 12 minutes for opening bell. But I wouldn't be surprised if we have another flush down to try to retest the lows from Monday and try to revisit this 200 EMA, and then see at this point as we roll into Jackson Hole, roll into September, if we're in a spot where the market can kind of save itself from itself and maybe hit a retest of these highs. Okay, and that's probably my target for the year. If we do get a retest of the highs, I'd be very happy with that. I wouldn't be super bullish or super greedy, expecting to go to all-time highs. In fact, I mean, one thing we could see on this market, and this happens in Forex quite a bit, is if we continue to see overstretched conditions. We have a one, two, three, four, five. If we have a pattern like that, that's called a three drive pattern. That would be the breakdown and the topping pattern. So just throwing it out there. We'll be watching this stuff going into the end of the year. But we'll see what this 200 EMA support zone is made of, and watch everything accordingly. NASDAQ, we did touch the 200 today. Let's go Q, see if we're opening up slightly softer. We are about $1.40 softer. And same type of area. You can see this nice little gap. Let me highlight this. So this area right here, right? Oops. So this area right in here would be, if the bulls are coming back to find something, there's a nice little lonely weekly pivot right there. There's all sorts of support before that market broke back down. So I could see this as a nice spot to test. Try this. Test and reject. Okay, just in the near term. What's going to be telling is if we test and we reject, that we're not doing too much damage below the low. If we come down and test, excuse me, if we come down and test, okay, but we make a higher low, that's a good sign. If we come down and test, but we have this long wick and we're kind of creating this kind of support double bottom look, that's a good sign. What would be a bad sign would be if we dump down violently enough to then close lower. Because then if we close lower, do the bears actually get the upper hand? Are we talking about taking out this low, and then what happens? Well, if this is a larger reversal pattern, then the best we can do is maybe a lower high, and this market's probably predetermined for some type of self-fulfilling pattern that would mean more corrective to the downside. Maybe. But I really think the bigger correction to the downside is going to have to come with the word recession attached to it. I still think there's enough out there doing well. I think this is the market's chance to be broader. I think this is the market's chance to be slightly healthier and less concentrated, not as tippy, right? So that's the opportunity. That's the opportunity for investors to stop being so concentrated. But it's not everyone's favorite when they're going to start parking money into value stocks that have been underperforming for a decade. You know, it's not that exciting to be parking money in a bond portfolio that has been doing nothing but having drawdowns for the last 3-4 years. So if this is the return to yield or the return to the 60/40 portfolio, we'll find out. We'll see if traders are still interested in taking risk or if they're going to park that elsewhere. All right. Let's see here. Look at euro dollar and tell why it pulled back that much. I don't even have to look at the euro dollar because I'll look at the dollar index. Here's your dollar index. And I'm not sure what pulled back so much means because I feel like from the directional side of things, the euro dollar is probably not doing a lot. And this is what I see. And so technically, this is why your pullback is happening, in my opinion. So we have resistance, we have resistance, we have resistance. So any pullback to the downside is resistance on this wedge pattern that's going to force the dollar to make a move, right? Dollar strength would be pushing this back down a little bit into this wedge. Okay, dollar weakness. The euro does look poised for a bit of a breakout if we see additional dollar weakness. So this is euro dollar. I still see the same wedge that I have on the DXY, which is the dollar index. There's my wedge. I'm getting rid of this. Well, we can watch this trend line on the 4-hour time frame. We can see how this behaves, right? I mean, if anybody is looking to short the dollar, I'd say that stop loss is right there at that pocket level or just above this high at 104.50. If you're looking to see if the dollar is going to come back and retest lows. Okay. I don't particularly love the dollar right now as far as a bigger direction. If we go to the higher time frame, it's still in this wedge. So I want to see a clean breakout. And to the downside, if we do see a wedge breakout, hopefully this is not just a break to support, right? And we find all this same support level and the dollar just comes right back up. I hope that the dollar actually makes a meaningful move to the downside, and we're talking 100 or lower. If we connect this low to this low, is it possible to have some symmetry on the dollar to the downside? I hope so. Maybe 97 or 96. So dollar weakness of the market goes ahead and prices in this rate cut cycle. We'll see it. But I think since the market's backed off a little bit from thinking, okay, 50 basis points, 75 basis points right away, now the market's like, man, they're going to go 25 basis points. And then all the other central banks are going to do the same thing. All the other central banks will be cutting 25 basis points here and there. This week, we did have some rate decisions, right? If we go to the news calendar. So this week, we had the RBA stick to 4.35. We had positive employment out of New Zealand. Bond auction for the US CPI out of China came in slightly elevated. Unemployment for the CAD was off. So they expected 26, came in -2. Unemployment rate dropped a little bit. Last week was the big week with central banks. We had the Bank of England that cut rates on Thursday by 25 basis points. The Fed paused, but then the market, ripped the Fed a new one with the Nikkei. The Nikkei dropping as aggressively as it did Thursday, Friday, and Monday, and then the Aussie CPI. Oh yeah, BOJ raised rates by another 15 basis points. So anyway, let's go to CB rates. That is where things are at right now. CBrates.com. And let's look at the majors. Australia staying the same. So they're holding at 4.35. Canada, they've cut from 5% down to 4.5. Last cut was July 24th. Eurozone has cut 25 basis points from June. They were at 4.5. Now they're at 4.25. Japan around, I love that, around 0.25%, but off of that negative 0.1 that they had. And who else? UK, 5% cut from 5.25 to 5%. The US is sitting at 5.25, 5.5 right now, with rate cuts coming likely in September. And New Zealand is still holding at 5.5. So we're just on the verge of this like central bank tipping point where these central banks are going to start cutting by likely 25 basis points, maybe every quarter. So it's going to take a year for the overall central banks to be down, maybe 50 basis points to 100 basis points. I would not be surprised if the Fed is going to cut by 1.5% going into the end of next year, more than likely you're going to see some other central banks doing the exact same thing. They'll probably match, and so we're getting. We did have a lot of monetary policy divergence. I feel like now we're getting a convergence where a lot of these central banks are following along, like, okay, Fed's going to cut, our inflation data is this, doing about the same thing, and so I think you're going to see a little bit less restrictive rate across the central banks. Um, and again, that does potentially bring in this additional unwinding for the JPY, but a lot of that happens so quickly that I'm just curious if there's a lot more to it. All right. So back to your question there on the euro dollar. You get on that with the dollar index. Okay. And then what's to say? By the way, you were correct about Euro New Zealand. It was fast. Yeah, it's not surprising. It was fast. Euro Aussie, Euro New Zealand. They were all fast. Pound Aussie, Pound New Zealand. They were fast. So I do have a pending order on the Euro New Zealand for a swing trade. Pending sell at 84.11, stop above the highs, and then a profit swing going after about a 2 to 1 or slightly favorable. So if I get filled, my risk is around 238 pips. No, that can't be right. Okay, okay. Excuse me. 238 pip stop loss for a 615 pip take profit. So that's a 2.5 to 1 if I get filled. But I need to see price pull back, find my swing, and then push lower. All right. Let's talk. Let's just go through the top down here. So opening bell in about 2 minutes. I'm going to check my SPX price, see where we open up today, see if today's really directional or pretty sideways. Let me see if I get my options platform here. See if I have any big fat gamma levels that I want to trade today. All right. So 5-minute chart on the SPY. Opening bell level. Pretty quiet. Pretty quiet. 5:30. Okay. I don't see anything. I don't see anything really standing out at this time. So maybe, I mean, if we have additional runs, 5:35 or so. Okay, we got 2 minutes, but we're looking around 5:30 for starters. Okay, I'll come back to that. SPY pre-market, we're fighting back a little bit. This is within $1 now instead of $1.50. So we're fighting back a little bit pre-market. Futures, shorter term, we faded a little bit off that 5372. Let's see if the futures market can get back above and challenge the high for the day. We'll see. So let's see if we go. I'm going to set a chart alarm here at 5372 intraday highs. Keep an eye on that. Or if we start to fade, I could see that. So, having this big drop from last week, that was Friday's close. This happened all night on Sunday. You had your Monday open. We've been fighting back all week. We faded pretty hard. That was Wednesday afternoon, and then Thursday. So, down Wednesday, up Thursday, and we'll see what we're going to get to end the week. Right. Let's go here. Qs, watching, high, low, just see where this thing runs into some resistance. I'm imagining resistance being right in here on the NASDAQ. So the QQQ, if today is a, calm day, so be it. If we have a bit of a directional day, let's see if we can just kind of center things around 53.35. Let me check this. So here, trade. Today's the 9th. 53.35. Let's see. It looks like the market's trying to push up a little bit. Actually, this is, yep. Okay. Not so 53.35 is not where I wanted it. Let's go 53.15. So 53.15, looking at around a 13 delta, 75 to 95, and 15. Let's go 15 delta. I'll go 13. I'll take a little bit less premium here. So I get 405 today. Okay, very nice. So today, 8-9 centered around 53.13 or 53.15, and the sell legs 5375 and 5235 for a 405 credit. Okay, good. Going after a 15% profit. So I need $60 today. Okay. So we'll see if we can drain that for the first, maybe a couple of hours of trading this morning. Back to the charts here on the Nasdaq, the Dow. Some resiliency in the Dow, but we've come right back into this same level right there. So it's kind of a make or break for the Dow. I would not want to see the Dow get below 380. I'm not going to say this level here at 385 because that could be a bit of a bear trap, and then the market reverses off of that, maybe ranges back up to highs. But I would say I don't really want to see this thing do too much damage below this low right here. That price point on the DIA is 376. So if the Dow could just kind of stay in here, dig its heels in, maybe see some chop a little bit. That's okay. Um, I don't know. It might actually be a good strangler and iron condor for the rest of the month. Jackson Hole is always a little squirrely, so just be careful. But as far as the buy the dip, the bigger play. I mean, I've got some ratios on this one that I want to double check. I think those are out towards the end of the year. So where's my DIA? They're done. Okay, so those ratio spreads finished in profit. I could probably put in another one or two. If I still like the DIA, this one is a cheaper ETF to trade. I like this one for a little bit less volatility. I might actually look at this today and do some type of ratio spread by this area, like past resistance becoming support. If we had a correction from high to low on the Dow, a 11% correction, maybe picking up some shares on that. So I think a ratio spread would be pretty good on the DIA. Let me see what that looks like today. Russell, we're up to 206. I've got the 2085, so I've got some pin prices here the next couple of weeks if the Russell can stay somewhat stable. I'd like that kind of 2050 would be awesome as a pin price, 21 as well. Those would be some profit traps for me. And then the RTY, this one's fairly safe. This is a broken wing all the way down to 1875. Volatility index. So we went from 65. We're currently trading at 24. Next week, I do wonder if this is going to spike up a little bit. I could see the VIX coming back into the mid 30s or maybe even $40. I certainly hope it's not 60 again, but I could see this, down a little bit of elevation, and then we just kind of work our way back into maybe 20, maybe the teens, but categorically, 10 to 15 is considered low volatility. Okay, 15 to 20 is adequate volatility, and then 20 plus is considered high. Historical average of the VIX is around 18, which puts us right in the middle. So this is low, this is high, and this is average, right? But definitely a vol event for most of what happened this year. All right, SVXY put in some naked put at $35 when the IV was pretty high this week. The DXY still watching closely. If we have some short term opportunities on the dollar, it's right here. I like looking for dollar weakness in there. If we don't get it, I mean, if you see confirmation on your charts, I like that dollar index with a stop loss just above that 104 to 104.50 handle. If that's wrong, I would get out of that, and perhaps we're coming up for a range trade. But I'm not going to chase the dollar both ways. If I'm directionally trading the dollar, it's up here, okay, or it's down here. I really don't want to get stuck trying to chase my tail in the middle. Oil, oil's back up to 76 and change. I think next week is my crude oil expiration. That's a trade I put on for December. This is a trade for next Thursday, 72.50 by 72. Looking better for some profit. That was 24 cents here. So max profit's going to be about 240 bucks. Is that right? Nope. This one. 160 bucks. All right. So I need a little bit more time to decay in that one. But as long as we stay above 72.50, oil looks pretty good. Here's oil trade right there. So we're pushing up. I'm staying somewhat bullish on oil, and I'm going out pretty far into December. And I'm saying, look, I'm interested in oil. If it's going to come lower with a slowdown, we come back into these low 60s. But I think oil's still kind of range bound. 90 plus, 60 plus. We'll see how everything settles in, but that's oil. Natural gas. Not that interested in natural gas for right now. Gold, uh, all right, gold looks pretty good. Last couple of days have been better. So yesterday was a strong bullish day. We still haven't broken out of all-time highs. Just don't be surprised if gold has one more kind of test of these lows, just to kind of make sure those bulls are really serious. We'll see if this 2300 zone acts as support. I said just be careful of this as a bear trap, right? Let's say that we, come up here and we hit the highs again and it's a fake out trade, comes back down to the lows. That would not be a fun experience to watch. Gold hit all-time highs, poke all-time highs, but then drop to whatever that percentage is. It's probably single digits, but it's still pretty noticeable. I mean, that's an 8% correction. So we'll see. But I'm postured bullish on gold. I'm looking for breakouts. And even though I don't want to buy gold higher, I probably will. Because if we have a break and a retest, I'm looking to go long, and I've got my position on GLD right here. And I'll try to do the same thing and just add a little bit more. And then longer term, I'd be looking at like a spot price of 3K on gold. See if there's a longer term run. I mean, the environment makes a lot of sense. If inflation's coming down, um, that's okay. Inflation rears its head again. That's a good thing for gold. But mostly with monetary policy, if central banks are going to start cutting rates over the next 12 to 16 months or the next 2 years, that's usually going to fare well for gold. Also, if we have some risk off trading, that usually does pretty well for gold. Silver, silver, I still like looking for some pretty hefty past resistance becoming support around $26, 26.15. Bitcoin up to around 59. So there is one thing I wanted to note here. I've got all these chart alarms and trend lines all over the place. I mean, it's funny. Like I know some followers out there see my charts are like your charts are crazy messy. I mean, I get it, but I see price first, and then I take a look, and it's like the lines in the charts and the indicators will pop out afterwards. But I see this potentially as just a corrective channel for right now. Okay, but the one thing that I want to pay attention to is that support line, because that little fall came up to retest. I don't know. I mean, do we have another flush lower? If we have risk off trading, Bitcoin is not going to hold like everything else. If we have fresh lows in the NASDAQ and fresh low in the SPY and fresh low, I don't think Bitcoin's going to hold 50K. But we have to have a retest of those lows first, right? So anyway, I'm watching. In the shorter term, if all this is a pullback opportunity for this low, this high, and then a pullback in here, look for a trend line break and see if the bulls can resume and take it back up towards 74. Look, just for fun, I'd love a spot price this year of 100,000. I think that would be a nice little cherry on top for some risk taking, some risk appetite, a spot price, some all time highs, more and more adoption, more and more, seriousness of like, okay, this legitimately is a really great performing asset. I want to say that Bitcoin and gold have been two of the best performing assets this year. So, I mean, Nvidia's pulled back 30 plus percent. That was the best performing asset. And that actually outshined Bitcoin for the last like 10 plus years, Nvidia. Well, Nvidia's in some hot water just because the reality of like how much is being spent on AI, and then will it actually deliver? Or is Nvidia going to be the only game in town? Not if Apple has anything to do with it, not if Tesla has anything to do with it, not as Microsoft has anything to do with it. All these semiconductors that are out there, I mean, it's a big industry. So Nvidia has a nice head start, but eventually I think the competition heats up in a big way. And I'm not saying Nvidia is doomed, but I just think that it's a bit overhyped. And that's where when you get a stock like this that emerges to number one in the world market cap wise and gets to $3.3 trillion. I mean, that's crazy. This thing almost shed what, 6 or 7 hundred billion dollars in market cap. It's pretty crazy. All right, what else? Bitcoin, Ethereum. Let's go back to the daily chart. Ethereum. So the lows got taken out at Ethereum. That's an important spot for me to watch. if the lows are here, and use a straight line, lows are here. I would like to see Ethereum off of this low. I want to see price get back above. This is around 2750. So I'd like to see it get back above that 2750 mark, just to see if these bulls are interested in taking this thing back up and putting in more of a low. Uh, that being said, though, I mean, this flush has done some damage. This could be support becoming resistance. So if there's more downside, okay, that means one, I'm either buying Ethereum cheaper, or two, in the interim, I'm potentially going to lose on a credit spread that I need price to get back above 60 bucks. But on the daily chart, I do see this as oversold right now. That's what that little line is, oversold with divergence, but not there yet. Copper hanging out at $4. Nikkei had an indecisive day, but a red day. This is the same type of thing. Do we have this big flush push up here, little indecision? Are we going higher on the Nikkei, right? Or is this flush down, retracement, and then we try to retest the low in the Nikkei? This is a good spot to be long in the Nikkei, I think. I mean, longer term, probably, but having this index down 27%, if we revisited that level and you looked at this longer term, I would consider, taking some trades on the Nikkei. But it just depends on how courageous you are to buy the yen or sell the yen, because it's going to correlate. All right. Let's go foreign markets here. If we go to the DAX, big sell off this week on the DAX. There's still some decent support going back to our 2022 lows, going back to our 2020 low. So there's some support. I just want to see if we hit it. So it looks a little toppy up here. Is this a head and shoulders pattern that just played out? We hit that symmetry. So I just want to see if we kind of settle back in, past resistance becomes support, maybe. But German DAX, threat of a recession, not sure. FTSE for the UK, FTSE looks a little bit better. Looks a little bit better. Not a ton better, but I mean, it just seems like a little bit more stable for now. Hence saying this is China. And in the daily time frame, the last couple of days have been more bullish than bearish, which is good. We've kind of come off those lows recently. This is Brazil. I kind of like Brazil off this like 26 handle, but I'm maybe wishful thinking for something back into the low 20s, but that's COVID levels. So if I want some Brazil exposure, that's probably a play in energy. That's a play in emerging markets. It's not a bad spot, even if we range from like 27 back up to 35. Okay. And then our Mag 7, and I'll go to some currencies too. So Apple, bit of a gap fill. We'll see what happens there. Amazon, same thing. Big flush down from 190 all the way down to 151. We're back to 166. Google, if we fall a little bit on Google, there's trend line support right around this 150 handle. Meta, pretty sideways for right now. Meta's at all-time highs, and we're just off all-time highs. So there. If Meta can hang into this area, a broader market bullish run gets Meta all-time highs. A broader market sell-off, it probably puts in a bit of a top on Meta and a correction ensues. So not sure yet, but we'll be watching. All right. Microsoft, bit of a pullback here. Is this a topping pattern? Right? We broke this trend line. Is this high, low, lower high, lower low? Maybe. Microsoft has had a pretty amazing run. A correction against that run, to me, that's just a 1, 2, 3 correction. If we have this low from the correction in 2022, we rip up here. This looks eerily similar to the S&P. A little bit more volatile, but if we go high, low, lower high, lower low, past resistance becoming support. To me, in the mid 300s, Microsoft is a very attractive stock longer term. So hopefully I get that price. I'm just going to go ahead and set a box on my chart here. I mean, who wouldn't like some Microsoft at maybe 30, 40% off? Yeah, it'd be about 30% off those levels. Netflix just off all-time highs, maybe creeping up. That was an earnings play. Those can be closed. Maybe I'm just watching this type of structure here. Trend line's got to stay supportive if we're heading to all-time highs. If it looks a little toppy there, possibly a rising wedge. I mean, it happens at all-time highs maybe. So something to consider. Nvidia, I did put on a ratio spread this week. So ratio spread on Nvidia, I did a 68 by 67 for $1.10 credit. Willing to take some shares of Nvidia, and then I also did that was an earnings play from $12.99 to $15. So I've got a ratio spread in Nvidia right now. I'd be willing to own the shares around 65 bucks on Nvidia. I mean, I'd own the shares down there, right? Or are they coming back to 40? I don't know. But if nothing happens, I just make it an income play. Tesla, we're trading at 199. This one has an expiration, I think, out to next week. This is a ratio spread as well. So I don't mind taking some shares of Tesla just for a quick repair. Tesla is here. So I have the 205 by 200, and then I have a wide credit spread. Actually, no, it's two ratio spreads, the 130 by 115, and then the 205 by 200. So watching those closely. If it's above 200, my ideal spot would be just above 200, but that way I don't get assigned, but I keep that long put for some profit for maybe $3 or $4. So I could actually generate some income there. Did somebody get filled? Nope, I took profit on that earnings play last week. So I did have a reverse iron condor on Tesla. I took the shares. I managed it on Friday. Ended up taking the loss on the opposite, I took a profit on the opposite credit spread, and then washed the shares. Ended up making like a dollar net profit. But I wanted to do that as opposed to taking ownership because I knew I had the ratio spread that expires on the 23rd. So that's Tesla. Bond wise, so let's look at yields first. So the 3-month is down slightly, 2 years down slightly by about 1/3, 1%. You got the 10-year down 1.4%, the 20-year down 1.4%. Wow. Okay, well we had a big shift. We've seen bond prices level off a little bit. TLT poked up towards $100 and it's coming back up a little bit. I still wonder if there's more in this trade. Symmetry wise, this swing to this swing, right? I mean, I'm still looking to see if TLT gets to 105. I think an easy diversification out there, if you want to really simplify and concentrate the portfolio, if you're looking at SPY and you're looking at TLT and you're looking at GLD, I would even throw in SLV just to be a diversifier with the metals. But I mean, right there, I think if you were actively managing a portfolio that's essentially allocated to these things, I wouldn't mind. I mean, TLT is going to be more safe haven, but if let's just say it's even. Let's say I don't know. I'm trying to think of the ratios here. You can say 25 for each one, and that makes up 100% portfolio. I would say gold and silver are going to be somewhat similar. So maybe you give both of these together 25%, right? So together 25%, and then you have trying to think. That'd be 75 split in two. So would be 37.50, right? So if I did 37% in my SPY, 37.5% TLT, make it a 50-50 portfolio. Or obviously you can do the 60-40 as well, right? Do a 60-40 portfolio with the SPY allocation at 60, the TLT at 40. That should give you a little bit of a hedge and some safe haven plays if TLT and bonds start to go up as rates drop. And then your metal allocation at 25. This is not a bad play moving forward as things kind of settle down. I think as we kind of spread our wings into more value, get out of high concentration tech, this wouldn't be a bad portfolio moving forward. So just thoughts. All right. Any requests, any charts, any currencies, any crypto, any stocks? How'd everybody do this week? We do okay? It was a wild week. I had some pretty large P&L swings. I'm hanging in there, hopefully getting some expirations and max profits. It's going to be close. So if we're drifting a little bit lower today, this is probably a helpful thing. I'm starting to notice here, like this debit spread. Hopefully it closes out below 54 by next Friday. I don't know if I'm going to hang on to it that long. If this starts to get up into 80s, Like right now it's 73 and change. If this gets up to 75 or $80, I might just take it. That's 80% of the profit anyway. And that gives me a net position on that spread that I did with ES. If I go into the next one, same thing here. I've got some trades running through October, September, November. Gold still looking pretty good for some profit. And NASDAQ. This is a 1-1-1 ratio. It's a pretty much like a ratio spread. I need to put on a hedge here. Maybe, maybe not. This one actually, this is the end of the month. I think this one's okay. Let me take a look at NQ. So NQ, there's my bear trap. So if we stay where we are, I have a $100 bear trap right there that pays about 5K. And then I keep my credit from down here, which would pay me another, trying to think, 30 bucks, 50, it'd be another $1,500. Okay, so another $1,500 right there. So it's a pretty big profit trap to kind of max this thing out. So we'll see if that cooperates. All right. If you don't have any requests or any questions, I can wrap it up here, and I will be jumping on to another live stream in about 7 minutes with Nick and the team at A1 Trading. So if you want to come back to the Pulver Bar here in a few minutes, go grab coffee, grab a drink, stretch the legs, and I'll be back in about 5 minutes. And I'll just push on my channel once again. Okay. All right. If you're out there tuning in live, thanks for being here live. Hit the thumbs up button, like and subscribe, all that good stuff. You know the deal. Support the algorithm, support the channel. I appreciate it. And I'll be back in about 5 minutes with another session, and we'll be talking more about the week that was. Okay. Thanks, everybody. See you in a few minutes. Bye.